Hello, everybody. Welcome. This is Ascender's virtual community event. Thank you so much for joining us. My name is Ania Aleman, Innovation Director at Ascender. If you can please right now take a minute to locate the chat box, which you can find towards the bottom of your screen, just to make sure that you have it ready. We will be sharing important links and announcements there, so make sure that you locate it right now. If this is your second time or many times where to join an Ascender event, welcome back. But if this is your first time, I just want to take a couple of minutes to tell you a little bit more about who we are. Ascender is Pittsburgh Communities for Entrepreneurs. We offer educational programs, mentorship, expert coaching, business incubation, and a collaborative workspace located in East Liberty here in Pittsburgh. Our community events happen twice a month. Here in our community events, we connect with local experts who donate their time to come here, connect with the community, and provide you with specific and tangible tools to move your business forward. So today we're working for the first time with Jonette Solomon, and we're very excited to have her here with us today. Without further ado, I'm just going to provide you with some links in the chat box in regards to how can you learn more about Ascender, our upcoming events, and also our upcoming initiatives. The best way for you to learn more about our events and our experts is to sign up for our newsletter, where we send information frequently about what are some of the tools and educational programs that all business owners should be able to attend here at Ascender. So without further ado, I would like to introduce our speaker today, Jonette Solomon. She's an accountant and a business owner. And I would like to take a minute, just make sure that she introduces herself and tell us a little bit more about her company and her background. So Jonette, I'm just gonna pass it on to you, to introduce yourself. Thank you.
Thank you. Hi, everyone. I'm Janae Solomon. I am an accountant, and my company is called Booksmart. It's a new company where our goal is to create the most intelligent accountant in the world. And that accountant is half bot, half human, where we will use technology to make accounting fun and streamlined and automated. Today, I'm presenting on financial analysis. And the way the presentation will go is I'll present and then we'll have questions towards the end. So I'll share my screen. All right, so the numbers is life. That's my approach, and maybe because I'm an accountant, but maybe others agree. But at the end of the day, everything comes down to numbers. Here's the overview of how it's structured. We'll start with financial analysis. This is the goal. And the goal of financial analysis at the end of the day is to discover a way of how to assess the viability, stability, and profitability of your business and your life. Because if you're not profitable personally and you're not stable or viable, it really doesn't matter what your business is doing. The presentation will just go through all of the steps you'll need to get to great financial analysis, and then we'll ask questions at the end. So why financial analysis? Number one, it's important for you to understand how to make money. Whether you're working or you have a business, understanding how to make money is essentially how we all live. Second, after you make money, is understanding how to keep the money you make. Third, how efficiently can you make revenue and profits? And that's simply measuring how fast you can make and keep money. And fourth, what is the risk involved in doing business or in your personal life? Understanding the risk, how to manage your risk, and how to plan for it will help you to keep the profit that you make. We'll start with goals because everything starts with goals. You start with, at the beginning with the end in mind. You have to know where you're going, why you want to get there, and of course, how to plan for it. Only you can define what your success is. So when you start planning your goal, first define what success actually means for your business and for you, and be very specific. Be very concise in what you want to achieve, and be very specific on what success is for you. In defining your goal, you have to put a number to it. The number, of course, should be monetary, but it should also be a time frame. I want to achieve X by Y, or something that's very specific with a number. In setting your goals, it's important to set milestones because you want to know that you're on the right track. I like to start with extra small milestones, like super small steps, and then build to small milestones, medium and large and extra large. But sometimes it's good to just have small milestones so you know you're on the right track and you can easily pivot. The most important part in goal setting, of course, is your mindset. Success is blank, whatever that blank is for you. You have to be realistic. If someone says, Janae, I want to grow wings and become a unicorn, I don't know if that's a realistic goal, but you have to be honest and you have to be fearless. Every goal should have a strategy. A strategy is just your long-term plan. This is where you want to go, how you're going to get there. And in planning your strategy, start with your priorities. Say yes to things that'll take you towards your goal and say no to things that will remove your goal from you. In your strategy, it's great to have tactics. Tactics are just a short-term plan. This is within your strategy. And it's a step-by-step action plan of what you need to do. If you have a goal or a plan without tactics, it will not work. Number 3, list your resources. And this is every resource available to you. It doesn't matter how small or large the resource is, make sure you have a list of it. And number 4, list the skills needed to execute your plan. Decide if you have the skill, if you need to hire the skill, or if you need to learn the skill. But have a list of the skills you need to execute the plan that you're putting into place. Like every plan, there's always barriers, but obstacles don't block the path, they are the path. So barriers are actually not an issue, they're not a problem. You just have to plan for them and know how to deal with them when they appear. After you set your goals and your strategy, you have to create a plan. In the plan should first start with a life plan. Business is important, everything is important, but without a life plan, it really doesn't matter. Whatever your business is, it has to fit into that initial life plan. Secondly, create a business plan. In this presentation, I will provide a one-page business plan. That's really all you need to get started. And last, define your principles. What do you live by? What is your belief? What is your philosophy? Because this will dictate how your plan goes. Managing risk, as I mentioned earlier, is very important in creating your plan and your strategy. Always identify what the risk will be or what they are. Don't tolerate or accept anything that's a barrier. Identify the root of all your issues. Where does this issue stem from? How can I solve it from the root? Be honest and open with what the issues really are and be able to name them so you can solve them. And number 3, solve all of your issues and manage all of your risk. Do whatever is necessary to remove those barriers. This is the formula for risk. In case you didn't know, it's not a gut feeling or a thought. There's actually math behind managing risk, but we'll talk about it later. After you have your plan and your strategy and your goals, you have to budget for this. How much will my plan cost? How much will my strategy cost? Creating a budget is the most essential part of actually achieving your goal, because if you don't have the budget to do it, it becomes very difficult. So create a budget for the goal, create a budget for your plan, and create a strategy for how you'll get all of the numbers within your budget. At the center of everything are your decisions. Why do we do financial analysis? What is the reason that we're crunching all of these numbers and looking at all these ratios and understanding where the numbers come from and where they should go? The reason is to help us make decisions. And that decision is planning your analysis, your strategy, your budget, your skills, and your goals. All so that when you make decisions, you can be right all the time, or most of the time, or 99.9% of the time. This will help you to create a decision-making system and the art of being right, which we all like to be, I'm sure. The components of decisions are all based on a logic model where you first learn and then you decide. So in making decisions, you must always include logic, algorithms, equations, ratios, expressions, analysis, and parity. I've tried using my gut before to make decisions. I'll just follow my gut, but it doesn't always work for me. So this is the process to get to knowing you're making the right decision. It's setting your goal, having a plan, having your budget, having your strategy, and knowing the risk. Everything I just mentioned should take about 25 hours. You can commit to 25 hours of putting it together, and it really shouldn't take more than that because the goal is to get started. I'm sure everyone has heard of the SWOT analysis. I'm sure most of us has done it, but a SWOT analysis is something that you reiterate. As you get stronger in some areas, weaker in other areas, more things become a threat, there are more opportunities. You want to always update your SWOT analysis for your business and for yourself. So to get started in your business, first you have to know what business model you're using. These are the 5 main business models. Everyone falls into one of these categories. Then in making money, there are revenue models, and I've listed these on a sheet I'll share later. But when you decide to be into business, here are the ways that you can make money. And there are only 3 market models. You're selling to a consumer, consumer to consumer, or business to business. And in the marketplace, in the total marketplace, you have a 3-sided marketplace, 2-sided, or a single. Those are your choices. When you're choosing your business type, these are the choices as well. And everything I've mentioned will help determine the type of financial analysis that you'll need to do. So here's a pre-analysis checklist. You've done everything that I've already mentioned. You are in business or you're living your personal life. And now you have numbers and you've made sure that your numbers are correct. You've made sure that your data is true. You're using the correct chart of accounts to analyze your numbers, and you have completed a budget. So now we have something to analyze. This is just a reminder that numbers equals life. So now we're really getting into the financial analysis. This is the ability to know the viability, stability, and profitability of your business and life. So what should be analyzed? So there's only two things that we'll ever analyze, really, and that's financial events. These are things that will affect your assets, your liabilities, equity, income, expenses, and cash flow, and non-financial events. So it doesn't affect the financial statement. Today we're looking at financial analysis. So I'm only really looking at financial events. All of your financial events will exist only in three places: your income statement, and your income statement is sales, the cost of sales, and your expenses. Your balance sheet, assets, liability, and equity, and your cash flow statement. Where's your money coming from? Operating, investing, financing. So this is accounting in a nutshell right here. We don't do anything else. So why is it so complicated? These are the only things we do. In your income statement, we'll look at basically how do you make money and how do you keep money and how fast. That's your income statement. Your balance sheet will tell you how much is your company worth. And it tells you how well the profit and loss statement is doing. And your cash flow tells you how fast or slow cash is coming in and from where. So now we're going to get into a sample of what this looks like. So we'll share the Amazon financials with you, and I'll pull it up on my screen. So these are the financials from Amazon. And I think I can share this one, might be better. But everyone should have a link to this. And I will not read this, do this at your own time. If someone wants me to do a financial analysis report that looks just like this, I'm happy to do that for anyone in this presentation today. So when you do a financial analysis, it usually looks just like this. And everything that we reviewed today, your assets, your liabilities, your indicators, it tells you how well the company is doing. So the key things that you look at when you do financial analysis, of course, we are going to assume that all of the numbers are true. The data is correct. And so you can take it one step further to say, here's my debt ratio, my debt to equity ratio, and here's how my company is doing. If you really want to understand how well your company is doing, you should be doing analysis every day. But when you really get into your numbers, people do it more than once a day because they want to see how they're doing in their business. The next document that I'll share is your personal financial plan. And this is pretty much what should be completed first. This template you can also find somewhere online, but before you do your business budget, it's definitely important to start with your personal financial plan. In the personal financial plan, I have a summary of all of your numbers, an income breakdown of where your money comes from. And you want to break down your money as well as you can. And look at your monthly income. Also, your monthly expenses. You know, where's my money going? Your expenses and where they actually derive from. If you have loans, what is your money costing you? A lot of people don't know what the money's costing them. So if you have a loan that's 3%, you know, and you want it and to negotiate 2%, it'll show you, well, here's what it will cost you now at 2%. So your payments just went from $300 to $200. But if you have a loan that's 9%, what does this loan at 9% cost you? The total interest is right here, your total interest in original principal. So it's good to know before you get a car, this is a car loan, but you can change it for anything. What does your money actually cost? And that's a loan amortization for your house, credit cards, everything is on this budget. So feel free to just use it in a way that will help you. And once you understand your personal finances, you can come back and analyze your personal budget before you analyze your business budget. I think that was, yeah. So everyone should have those important links to look through first, because it is a lot of information and I want to make sure I spent time going through it. But the other link that I hope I shared was this one, which is the financial analysis in a nutshell. So I talked about your business model, and I think this is shared as well, yeah. So once we've determined all of this, as mentioned before, this will help you to have a high level look of your financials. You can plug any number in here and it will calculate for you, because these are the key components that you need to know. Probability ratios are pretty much the most important. It lets you know if you're making money. If you're a startup business and you want to understand your valuation models after you put in your financials and you run your probability ratios, this tab covers all of the valuation methods, at least the main valuation methods. So if you've determined, I'm going to be a C corporation, I want to get shareholders, I want to be a unicorn and get an investment of $5 billion, then you have to understand how that will be evaluated. This tab has the one-page business plan. This is really all you need for any business. Super short, 1 or 2 sentences, and you're ready to go. And then everything requires a cost-benefit analysis. You need a skill. Should you learn the skill? Should you hire the skill? That's a cost-benefit analysis. You have to know what benefits you or the business versus what you're paying for it. So the reason we're looking at all of these spreadsheets, all of this data, all of these ratios, which there's many ratios, I think, let me see, it's on here. I will share one more spreadsheet with a list of ratios. And the reason we're looking at all of these ratios is really to make more accurate decisions. The reason your business will be successful and you will be successful is because you understand how your business makes revenue, what the revenue costs, how much money will cost if it's borrowed, and what to do with it and when. Making those decisions will increase your profit margin. It will build your retained earnings. It'll help you allocate resources more efficiently. It will help you scale faster, achieve success, and reduce stress, which is I know numbers may look stressful in the beginning, but in the end, it actually reduces lots of stress. Questions?
I'm gonna get started. Janet, I'm curious to hear about sort of like, like this is a lot of information and it can get really overwhelming. And so as you work with businesses, what are sort of like common first mistakes that people are making, and what would you advise in regards to like, like how do you work through all of these uh, different templates and paperwork?
Yeah, the first mistake people make is they don't do any of the work. They just ignore every single spreadsheet. They don't do a budget. Goals are not set. There's no strategy, uh, no tactics. So people don't do any of the work, and then they want to just achieve success because they heard about it. So I think that's the first issue, is that the work is just not done, in just going through the processes of completing a budget or doing the financial analysis and understanding what those ratios look like.
So we have one question in the chat box. Are there any financial legalities we have to watch out for?
So the biggest legality financially are taxes. One of the reasons you want to plan, mainly, is to understand your tax liability. There are lots of businesses that make money, but they send that money to the government in taxes because it's not planned for. So the biggest legality is really tax planning and doing it well and doing that in a legal way so that you're never having to cut any corners.
Hi, my name is Abby. I asked the original question about legalities and you responded with taxes. Do you have any suggestions for a good place to start understanding your tax liabilities? Would you recommend having a CPA? How much would you recommend doing yourself, etc.?
That's a great question. You can always start at irs.gov. They have all of the resources that you need. I highly recommend hiring an accountant. I know people ask me all the time, I could just do this myself. I can Google it. True. But the key thing is the accountants know the strategies. Like for me, I am an accountant. So this is what I do daily. I like reading the tax code and the Corona Act and the CARES Act. Like that's my reading for the evening. But if anyone else likes reading that, then sure, you can do it yourself. But it's always great to have a professional in your network where you can just ask questions, because Google is only helpful if you know exactly what to Google and how.
Thank you.
And I'll go back to the financial analysis for Amazon, and you can see that right now Amazon is ranked as one of the most profitable companies, and they're also one of the companies, just like Apple, that scrutinize every single number. Of course, they have not an accountant, but a department of bean counters. But the reason that they are so profitable, the reason they do so well, is Apple and Amazon and Walmart. From the very beginning, they understood their revenue model. They understood how they were going to make that money, reinvest their money, and build their companies. And even though some of their numbers are not strong, in the revenue part of their numbers, profitability is extremely strong. And I'll go back to the ratios that I presented, and I think I may have missed a link, and I'll send it later. But in the financial ratios, there's about 300 ratios. And people will say, well, which one do I need to know? The most important ratio, two of them, is your profitability ratio. Am I making money? And this is good to do even for your job, right? So I'll start with personally. If you're working at a job, you're making X, and let's say you're working from home, you're using your utilities, your internet, you may order one meal a day. What is that job costing you? So you're making, let's say, 5,000 a month, but when you do the math on your job, or if you're commuting and parking and whatever else, and that job is costing you $4,000, and you're spending 40 hours a week and you're making $1,000, your cost benefit analysis would say, is it worth it for me to make $1,000 a week? And that's the same with your business. You look at profitability. I'm spending this much time, because your time is your most valuable resource. You put a dollar amount to your time. My time will cost you $1,000 an hour. And then what, that's what it's worth. You're spending X on your time. What is the margin? So the profitability ratio is number one. Am I really making revenue? And the cost benefit analysis is the second most important ratio. What is it costing you for the benefit that you're receiving? Those are the two that you really should be doing as often as possible.
Jenny, I wonder if you can talk a little bit about, like some businesses and organizations and nonprofits as well are getting ready to apply for, some of the upcoming like pandemic relief loans and things like that. Can you tell us a little bit more about, how should they be, how do they decide whether, they should apply for them, and how does that look like in regards to like their financial planning moving forward, and also like, thinking that the pandemic will still be around for the next, few, maybe probably the next year.
Yeah, I mean, I'll go back to the cost benefit analysis. If you can get a loan from the government for 30 years at, I think 3% or 2%, that might be worth it. But 30 years is also a long time. Is your business viable? Will you be around for 30 years? And maybe that's a good thing if you're not, this is being recorded. But, 30 years alone at 2%, that may benefit your business. Or, there may be a 1% loan. But if any of the government programs are beneficial, the math will tell you yes or no. So that I suggest doing the finance ratio on interest for your business, cost of interest rates. And that will say, can my business afford this loan? Secondly, I will look into the grants. If you read the fine print in the CARES Act and the Coronavirus Act, some of these loans are forgivable. So if you follow all of the rules, they're actually forgivable. You just have to follow the guidelines. And the other thing I'll say with government funding, you can always let the government know in the future if this is true. I can no longer afford this loan. I know I said I could, but I can't. So I'm going to need an abatement. You can always ask the government for that. Lastly, there's tax credits out there that people always forget about. And I always mention tax credits because people just don't apply for them. And if you're a startup, a nonprofit, you're getting equipment, you're hiring, you're training, you have to do a new process. There's tax credits available. So I would look at those tax credits as a business model. Amazon is where they are because of tax credits. They've gotten around $700 million in tax credits for their business. So they're not just profitable because they sell things at a low rate. They're profitable because they utilize tax credits.
It's Abby again. So I run a nonprofit. And so what would you say are the biggest differences when it comes to nonprofits when thinking about finances compared to for-profit companies?
Yeah, the biggest difference with nonprofit and for-profit is nonprofits forget that there's profit in their name. Nonprofits forget that you are a corporation. So nonprofits do not spend enough time understanding their revenue model, and they don't spend enough time understanding the cost of their mission. What does saving the world cost? No one ever asks that question. It's expensive. So that's the biggest issue. For-profit businesses know what they sell. They know the revenue model for the most part. Nonprofits totally ignore that. Our mission is expensive, and we have to understand how we're going to get the revenue needed to accomplish that mission. And I'm trying to save the world too, I must say, and it's pricey, you know, and people don't understand how expensive it is to really change the world. How much does it cost to save the world? Everything.
Alrighty. Well, so I think Johnny and I wanted to make sure that we take an opportunity to get to know each other a little bit more, and also just further reflect on the material that you learned today. So I would like to propose that maybe we can, do a couple of breakout rooms, and we can just go through on a very quick activity to just like get to know each other, and then we'll come back into the room, and then until like close in the next sort of like 5 minutes. So one of the things that we wanted to sort of like encourage you to think about today is sort of like take a minute to think about where your business is at right now. Where do you want to take it this year, your business or organization, since we know there are a couple of nonprofits here, and what do you need to get there? So we're gonna take a few minutes to sort of go over this exercise, and also take that opportunity to get to know who's in the room. So whenever you're ready, Ben, we're gonna get into breakout rooms. Welcome back. Hi. So I'm curious to hear about, like if someone can if someone can volunteer and talk a little bit about, what they discuss in their breakout rooms. Any volunteers? How about Tanya?
Nina Dealy. We discussed a couple of things. So my questions were surrounding sales and how to kind of approach not really having concrete numbers. And I think it circles back to doing more market research and testing it out and building that into the models. And I ended off on one question about revenue models. And I think for early stage companies, even though I'm at a company that's been around almost 4 years and I'm starting one myself, they kind of still have those similar challenges when it comes to exploring different revenue models. And yeah, just figuring out, testing it out, each one.
Thank you. How about someone from the other breakout room? How about Connie?
I'm so lucky. So we're talking about goals. What my goals are for my practice. I do financial planning. And so one of my goals right now is to improve upon my digital presence online. And then we had another young lady who, she discussed some of her goals. And that was just based on the direction that Jonay gave us to make sure that we have some clear defined goals and, make sure they're qualifiable. And after talking, we figured out that we could help each other out, which is always a blessing. So, I think anytime you have people in the room who have skill sets, it's always a blessing for everybody to be able to sit down and come to understand exactly what it is, how we can help each other out.
Thank you for sharing, Connie. Great. Anybody else who want to share before I hand it off to Janet? Alrighty. Well, Janet, I was wondering if maybe you can tell us, some parting advice based on, the presentation that you provided today, how to connect with you, and then, just, share your, a couple of minutes of your wisdom while we have you.
Thanks for that. My only thing is to not be afraid of numbers. I hear it all the time, and I mean, I love numbers because I don't know how anyone lives without them. But that's my parting thing, is to really embrace the numbers like step by step. And even though there's a lot of information, the key to start is the revenue model, and for yourself and for your business. You know, what is my revenue? What is the revenue of my company? And how much does it really cost? Because the unknown is really where the stress comes from. The unknown is what gives us fright. Like, I don't know if I'll have sales. I don't know my runway. I don't know if I'll meet payroll. Anytime you start with I don't know, it's just anxiety. And I guess that's why my stress is low, because I'm like, I know exactly how much money. Like today I was at the bank and they're like, do you need a balance? No, I know exactly how much money is in there. And so it's like, once you start getting to the place where, I know how much this costs, I know the cost of this resource, I know how I should allocate this. And then when you start knowing it in a strategy, like for 20 years out, then you don't worry about it, because you're like, I got that, because you've planned for it. So I would say it can be stressful in the beginning, but I tell people all the time, like, I have aged backwards. This is no lie. I looked older 2 years ago because, I was not planning, I wasn't taking my own advice. And then once I did that, I'm like, oh my gosh, I'm actually looking younger, because the stress like walked off my face because I was taking my own advice.
So and I think as someone who doesn't like what I don't like, what I like, what the numbers can teach me, right? So I get a piece of, I finally understand the organization. When I first got into this position, I actually went line by line QuickBooks on every transaction that we had in the year prior to me. And I understood, what's our IT work look like? How does our payroll look like? What kind of programs do we actually, so I felt like I actually understood the organization, but I do not like running the numbers. Like I do not like the process of getting there. And I think for me, what I've forced myself to do is like give myself an hour, and that's the only thing. If I don't accomplish anything, fine, but at least sat there and I'm going to be trying to run and calculate the numbers. And I think about future Nadili is going to be so glad I did this, and I'm going to have that peace of mind. Oh my gosh, it's kind of like when you go work out, you don't want to. Once you did it, you're like, man, I'm really glad I did that. So just put that 1 hour, it's a Friday, it's a Monday, whatever, and just say, I'm just going to look at this spreadsheet and see if I can make something happen. And slowly something will, if that helps.
Yeah. And it does become exciting, believe it or not. I think for me, I am the bean counter. So I can sit there and count every bean and be like, ooh, this is exciting. I see where this is going. But you have to get to that place. But at the same time, I've had clients who didn't like numbers, but after that bank account adds that zero and then it adds that other zero, then they're telling me about their numbers. They're better accountants than me. So, it does change as well.
I would agree. And it just creates a peace of mind. I mean, when you can sleep at night because, you have and I always call it a defense and an offense strategy. If everything goes great and everything does wonderful, we can have a party. Or if something goes wrong, I can still have a party because I know I'm protected, my assets, my business, my personal, and I can still sleep at night and say it's going to be all right. And a peace of mind is just priceless. But if you don't dive into the numbers, you won't have it.
Well, I think we definitely have marching orders here. So I want to say thank you so much to everybody who joined. Thank you, Jeanette, for your time and for sharing so much and all of the information and the templates that you shared. We're going to try to compile as many things as possible in a way that will make sense for you. So, we'll be sending a survey and also an email with the information and where you can find it and how you can refer back to it. We will have it all in our website. And, thank you very much. Again, if they're, like what you learned today, don't be afraid of the numbers. They're your friends. As Jeanette mentioned, they're your life. We'll see you again. Thank you so much.